A lot of people have asked me about taxes and how it works when it comes to dropshipping. These are information that sort of applies to me, who is living in Australia. I believe Australian, Canadian and US and maybe even UK tax rules are quite similar. So hopefully you guys can use this knowledge to have a better understanding when you do then go talk to a CPA, a certified accountant. Number one, I don't have to pay taxes for my VAs, for my workers, since they're not based in Australia. I think companies who hire people from Australia, they have to pay tax or give them extra wage, something like that. I luckily do not have to deal with that issue. Two, I don't have to pay tax on the goods I buy. Since I'm purchasing all my goods from China and shipping them straight to customers, they're not going through Australia. Hence, I don't have to pay any tax on these goods. Whereas people who buy stuff in Australia or buy things and then ship it to Australia, that's a completely different issue. Furthermore, I do have to pay tax on the sales made by Australians. So in Australia, we call it GST. Usually, stores would charge 10% extra on top of the price. Since I'm able to charge Australian purchasers 10% extra at checkout, because that would be, that would probably be difficult to set up something in Shopify where everyone gets charged a set amount, but Australians get charged 10% extra. I'm just going to have to eat up the cost. Luckily, only roughly 10% of my purchases are from Australian. So I'll have to eat the 10% of the cost and give it to the government as taxes. So how I plan to do this is just export all the orders in my Shopify and just sort it by country, and then I'll be able to get the list of orders from Australia. Next, income tax. This is different. This is tax on how much I earn, my profits, etc. So if you're under sole trader, if you're like the sole owner of the business, you're gonna have to pay tax on your net profit. So in Australia, I'm going to have to pay 30 to 40% of my profits earned through dropshipping taxes. Two, stuff such as my computer, my camera, courses, subscriptions I purchase can be put under expenses, hence reducing the profits I've made, hence reducing tax paid. Now you might ask, should you spend for the sake of writing it off and decreasing your taxes? So I actually wrote out an example to show you guys the difference between spending your money to write off versus saving. So option A, you made $1,000 profit this year. You then purchase a $500 computer, which you could then write off. This $500 would be put under expenses, so your company only profited $1,000 minus $500, so that's $500 profit that you'll be then taxed on. Now that $500 times it by 40% tax, that's $200 that you have to then pay as taxes. Hence, you'll be left with 500 minus 200, therefore you'll be left with $300 cash and a $500 computer. So this is the result of option A. Now option B, you get a $1,000 profit this year. You don't write everything off, that's profit. You don't have any other expenses. You don't spend it on a computer. So your taxes will be 1,000 times 40%. So the tax will be $400. So as you can see, the tax is double. I'm paying double the amount of tax, but what I get left is $600 cash. So it's up to you. Do you prefer having $600 cash or $300 cash plus a computer? So you don't want to just start spending money on nice cars, the newest iPhone, the latest computer, just for the sake of writing off, because you'll be getting less cash in the end. This video is pretty important because you're eventually going to get to the point where you do have to start worrying about taxes when you succeed in dropshipping.